Well, UBS's rescue of Credit Suisse may not be enough to calm investors' fears as traders seek safe havens while assessing stability in the banking sector. All of these concerns surrounding the banking industry are sending gold above $2,000 an ounce for the first time in a year. It's now back below that level. Bank stocks have been, they've been bouncing around quite a bit, actually. We had UBS earlier lower. Now it's higher. You've got that banking ETF that has been trading lower. But, some of the various individual stocks are bouncing around quite a bit this morning. And I think that's important to remember, too, that, yes, we've had the so-called flight to safety. That's been a fairly consistent theme here. But in terms of these individual stocks, they've been all over the map. We just saw First Republic, which is down. UBS was down. Now it's up. Yeah. Credit Suisse is still down. But, I think what it is that there's just this real grappling to try to figure out what the effect of all of this is going to be. Right.
And from a stock picker's mentality, you might be asking yourself at home, is this a time to really position anywhere within your portfolio one of the regional banks that hasn't been hit as hard? Potentially on the strength that you might see there. There's been a lot of kind of focus on even like the PNCs of the world, some of the more regional banks there. And even if they are able to make it through this most recent turmoil that we've seen within banking, does that have a stronger value to your portfolio than if you were to opt into, say, a sector that did well last week over the past 5 weeks amid all that turmoil, and it was technology. It was semiconductors as well. Semiconductors stocks was up by about 6% last week. And so there's going to be kind of a picking and choosing, I think, among a lot of investors out there that are trying to decide, okay, even though we have had as much turmoil take place in a multitude of sectors, at this point, banks are the most recent fodder for conversation because of the severity of the closures that we've seen, the buyouts at fire sale prices that we were just discussing. But then additionally, it's kind of a positioning of how do I want to spend or allocate my own portfolio dollars right now. And I think for some of the rises that we did see within tech last week, that gives at least a little bit of a clear indication around how some investors might be thinking about this.
Right. I mean, at the same time, it was so interesting to see a lot of the regionals up, even if First Republic is still down. New York Community Bancorp, which, as we mentioned, has now bought agreed to buy some of the assets of Signature, has been trading higher. There were some headlines that the FDIC has now extended the sale window for the assets of Silicon Valley Bank. Maybe they'll think they're still going to get a buyer for that. So that's sort of the micro individual stock pickers view. And then, of course, there's the macro view, people going into gold, as we mentioned. Yeah. The Treasury market movement this morning is interesting. We've got selling in Treasuries pushing yields higher, which is interesting given that we've now got a lot of debate on the street about whether the Fed is going to pause at its next meeting. So yields higher across the board, although they're still pretty low compared to where they were a month ago. But nonetheless, that's an interesting reaction as well to see this morning.
Yeah, that probability as of right now for the next meeting for a pause sitting at 41.7% according to the CME Fed Watch tool here. So that is elevated just a little bit more than when we came into even the beginning of this day here. So we'll continue to track that.